Okay, so today we're gonna talk about how can you make money even if you are losing money, right? And you'll see what I mean when we get to it. First of all, I'm just gonna look at BNB real quick because Saifa's in a trade. I already talked to him about it, and really, it's very, very important that you trade the 5 minute, right? The 5 minute should be your main timing indicator, right? And Saifa entered at 27, somewhere like that, which is literally, he entered it along here, which is literally the top of the 5 minute, right? I'm pretty sure that, if you asked me, what I would say would be wait for the 5 minute to bottom. 15 minute was in your favor, right? But if the 5 minutes topped out, there's only one way to go, unless it gets stuck up, but usually it's not. You just wait for a 5 minute. So, and we'll get into it. Okay, so today what we're going to talk about is how can you make money even if you're losing money, right? So first it comes down back to our market theory that we covered many times already. Isaac and who else is here? I guess just Isaac that hasn't been at the first calls. You should go back. I don't know if you watched it already, but you should go back and watch the challenge. There we talk a lot about consistency, about the market theory, how it works, and so on and so forth. So that's underlying basic knowledge, and that's also going to be homework number one for you if you haven't done that already. So it's important that we understand, how the market moves and so on and so forth, and then understand that the stochastics essentially are just showing us, when they're aligned. That's important. They're showing us, how we're oscillating from the average, right? So if I could just draw a line here, right? So this is basically the line how the price is going, but the stochastics going above and below the line. The price is going above and below the line, this red line, and stochastic is showing us how it is doing, basically, right? If this is the average, stochastic is telling us is it above or below the average, and it's doing that pretty well, right? But no indicator is going to, make you millions of dollars just by itself, right? So it's a good market oscillator, right? What's our secret sauce, right? Why can we trade this better than other people using the stochastic? Or, why does it look like, since I started trading in the Discord, I haven't lost one single trade. Since, it hasn't been long, it has been like a week or something like that. And that's not telling you that the strategy is 100%, but, it's consistent, right? And every single trade, you make 20 to 30%, every single trade, right? You don't make 5,000%, you don't make 2%, you don't make minus 90%, you make 30%, right? And that's pretty much the goal, right, is consistency. And that's the main thing. And why can we do that? Well, we don't just look at one stochastic line with one price. What we look at is the entire market from different perspectives, from different time frames, and we find the connections between them, right? And that's the key, finding the connections between them and understanding the flow of the entire market from the low time frames to the large time frames. And when we do, then it's pretty clear where the price is going to go, right? It's pretty clear. Then the only thing that can happen to go against us would be, a huge sell or a huge buy or something like that. And that we have, taken care of as well, right? So how do we do that? Obviously it's a thing of practice, right? But that's why we have two things. First of all, that's why we have our daily trade sessions, right? Where you can just, even without that much experience in it, you can do the same trades that I'm doing, right? And just follow them and, make the same gains, number one. And then number two, as we're discussing all those trades, it's going to be very important because we're going to understand, eventually it's going to click for you. That's what it is. And I can talk about it as much as possible, and I'm trying to attack the idea from different angles. But what it is at the end of the day is you staring at the chart long enough where it's just going to click, right? And the click is, you're looking at it, you're like, oh yeah, like this makes perfect sense. I know exactly where the price is going to go because from the 1 minute up to the 4 hour, I know the biases, and if there's a strong bias across all of those time frames, then it's much more likely. Well, it's very, very likely to happen. As likely that betting against it doesn't even make sense. So in theory, by looking at stochastics, you could at any point of time in the market, you could estimate where the price is going to go, right? But we don't even need to do that. We don't need to have we don't have to be right all the time. It's a great thing that Warren Buffett said, and I probably said it before, but I'm going to say it over and over again because it's important, and is that the beautiful thing when you're investing is that you can say no 1,000 times, right? And it doesn't cost you anything. The only thing is that when you say yes, it needs to work. But you can say no 100 times and wait for the perfect setup and then just say yes, right? And luckily for us, we found a way, right, how to find really, really good setups. If the 1, 3, 5, 15, 30, 90, 1 hour, 2 hour, 3 hour, and 4 hour are all aligned, that's a very, very high probability trade, right? So like that's the easiest trade ever, right? So and that's like an extreme. But the closer we go to this, taking the safe trades in the extremes, the more our consistency is going to be better. Our profitability is going to be better because we just won't have losing trades, right? And then this is a huge like flaw or fault in most people's thinking in trading, which is when like I don't have to be right all the time. I just need to be right when I want to be right. Like you can pick when you play, So when there's a big move and if like I didn't trade it and other people traded it and you get FOMO, it doesn't matter. It does not matter at all. Your point is to go to the market and make the most profit in the smallest amount of time as possible, consistently, sustainably, right? And how do you do that? Well, you make sure that the thing that you bet on has such a high probability that you will just win over a long period of time. And if it's really good, over a short period of time as well. And this is what it is, right? And even with the with your current skill looking at the stochastics, like I wrote down like a 3-step checklist, right? If you just answer yes, if you only take trades where you answer yes on all of those, you will be doing fine. You'll be fine. You'll be profitable already, right? But the thing is, that the human mentality and human psychology is, if you look at the market right now, what you're thinking is, oh my God, the market's moving. I need to catch this. I need to catch this. If I don't catch this, then I don't know what happens. I'm going to die or something, right? But it doesn't matter. Like you can take one trade every 3 days and you'll be fine, right? Usually, right? I mean, there's some days where there's not that many trades if it's just very choppy, but usually, just looking at it for like 2-3 hours in a day, you'll probably have like 2-3 trades, and it usually comes in waves. So like when we traded, right, we started at 7 a.m. GMT, right? We started trading and like we waited for like 30-40 minutes maybe, then we had some trades, and then we waited for like 1 or 2 hours, then we had some trades, and so it's in waves like that. The reason that happens is because we're looking for alignments, right? So we're just looking for the frequencies to align, and once they're aligned, then they're amplified. That's really what it is, right? And there's a million theories why it works, and really it's just a simple probability of if the price is moved away from the average, the likelihood of the price coming back to the average is high. And if you overlay that over multiple time frames and they all align, then you get this beautiful effect of being able to know where the price is going to go. So really the main strategy that we have in this Discord, right, is the stochastics. Like this Discord is trading stochastics pretty much. Why? Because it's a good market oscillator, and our secret sauce is that we're looking at different time frames, and we're not looking at them separately. We're trying to connect them together. And with connect them together, I mean looking at, say, the 15-minute and see, okay, the 15-minute is going up, right? It's been going up, and it had this little bump there in the middle, right? And it's going up. What does the price do? It's going up a little bit as well, right? What does the 5-minute do? The 5-minute topped out, bottomed out, and went, not bottomed out, but like went below 50 and started going back up. In the 15-minute, that's this bump. Why did we have this bump? Because the 5-minute topped out. It had nowhere else to go. It had to go down. We had this bump. Why did the 5-minute turn back around and go up? The 15-minute was in the middle of the move. It was going to continue. The 30-minute just started its move. It was going to continue. The 1 hour is bottomed out, ready to go up, right? That's why it moved against. What the 3-minute bottomed out and turned back around. We reached this bottom of the range with the 3-minute being all the way down. Are we going to break this range? No. The 3-minute has nowhere else to go. It was going back up, which turned the 5-minute back around, which turned the 15-minute back around, right? So this is what it is. And, it's always the case. And really, Cypher, your prime entry was here. 15-minute bottomed, 5-minute bottomed, 3-minute has been bottomed already. It was going up. I mean, you were fine. And the 30-minute was bottomed. Beautiful, beautiful entry here, earlier, and that's the thing. Also, a change in mentality is we're not trying to catch trades. We're trying to, and this is you'll see this every single time when I start trading on those live sessions. Number one thing that I do is I start analyzing the market. I don't even look for trades. I start analyzing the market. I look at Bitcoin, right? I start analyzing Bitcoin, and then I start looking for trades. And I'm not going to jump into moves that have already happened. I'm going to look at trades, wait for the stochastics, specifically the 5 minutes, to top out or bottom out. And as it does, then I enter, which will make sure that I have a really good entry, rather than trying to catch the trade, FOMO in, and then, enter at the absolute top of this range along, right? Which just means, even if you're right, it means that you're exposing yourself to the entire range. It does not make sense. If you enter here, right, bottom of the range, everything's bottomed out, you're instantly in profits. Every single one of the trades that I did today were in profits within like 5 minutes, and they stayed profits. It was not like I did not see red. And that's just the timing of the stochastics, right? Because when you enter here, like you're down here, but then you're not down anymore, right? You take your profits, TP1, you put your stop loss to break even. There is no risk for you anymore, right? You cannot lose on this trade. This was a very, very simple trade. Let me look at, what was that? Something that Casper picked out. Was it I think it was Australian dollar, Canadian, or something like that. AUD, CAD. Yeah, I think this one. And that was a short here. I'm pretty sure it was here. I think. I'm honestly not sure anymore. Yeah, it was here. We were waiting. That was, and like he called it like here somewhere, right? Which was the 5 minute, still going up. We said wait for the 5 minute to top up, and as it did, price went down, right? When do you exit? Well, if you look at the 5 minute, then you're gonna exit with the 5 minute bottoms out, unless the 15 minute was like clearly in your direction, or like all the higher time frames are just strongly down. Then you can just wait for the 5 minute to top back up and go down again, and it's just gonna rip further down, which is kind of the case here. But I wouldn't have to do it because this would be my trade. So slightly besides the point, but the timing is very, very important, and we talked about it before. But like improving the entry is one of the biggest leverage things that you can do in your trading. Because let's go back to BNB. Entering here means that you're essentially instantly in profits with TP1 hit. You're up on 20x, you're up 20%, right? You're hovering around 5 to 10% profit. You do not reach your risk anymore, and actually your stop loss to break even, so you took money out already, and you're not risking anything. If you enter here, you have not been profitable since now, since you entered, and you've been losing. Like, you cannot leave this trade if you wanted to, because you're constantly exposing your money. That's what you're doing, right? So entering here and here, it does not matter if the price ends up going, to 5 billion. It does not matter. But your setup, like this person has been chilling the entire time. This person has been anxious the entire time for a good reason. Both of them, So rather than, if I see a move, halfway through here, I would never enter this. I would just wait for the 5 minute to go down and pick me up again. Why? Because the 5 minute goes up and down. Let's calculate this. Let's do an actual calculation to diminish your FOMO. So 1400 till 1400. Let's make a line here. 1400 to 1400. Okay, so in this period, right? How many times did the stochastic bottom out and top out? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18 times. So that you had a potential short or long opportunity 18 times on BNB. You can look at 20 coins if you want to. So in a day, you'll have 360 opportunities. There's absolutely no reason to enter a 5 minute when it's not bottomed out or topped out, and unless every single other time frame is screaming at you to enter. But 9 out of 10 times, 19 out of 20 times, it makes no sense to enter when a 5 minute is not ready for you. Because what's the difference? The difference is entering at essentially no risk. And also, one more thing. Let's say that your take profit would be here, top of the range here. I'm not thinking about it, let's just assume, right? And you enter here, and your stop loss is the bottom of the range right here. So here, right away, you have a risk to reward ratio of 4.6. If you enter here, you have a risk to reward ratio of 0.45. So if you coin flip on these trades 10 of these trades, how much money are you gonna make? With a 5 risk to reward, you're gonna make, well, 5 you win. Say 5 you win, 5 you lose. On 5 that you lose, you make you lose 1/5 of what you win on the other one. So make, I don't know, 5x, I don't know. And here, if you coin flip, you lose on a coin flip, right? So that's a huge difference, your risk to reward. A 4 or like a 4.5 to a 0.4 is what makes or breaks your account. So there's so many opportunities in a day, in a week, that it makes absolutely no sense to enter above or below when the 5 minute isn't topped out or bottomed out. Absolutely no sense. You're shooting yourself in the foot from the get-go. So yeah, that's important. The result of us trading stocks with alignment over different time frames is that we are right most of the time, right? And if we're wrong, it usually is a human error, meaning we either mismanaged the trade, we entered too early, too late, or we didn't take profits, we got stopped out because our stop loss was too high, too tight, things like that. Or we have misread the stochastics. We shouldn't have entered in the first place, right? Again, the main time frame is the 5 minute, others are confirmation, and it is the 5 minute because that's the speed at what we trade, right? You can easily trade the 4 hour, which by the way on the dashboards we do, mostly the 4 hour, but these trades are longer. This trade from start to finish, it's gonna take 4 days. And that's just not what we trade, and that's harder to put across to people that want to start trading, because they want to see, they want to, do trades every single day. They want to see results every single day. So that's why we go to lower time frames. But these larger time frames are much more secure and slower moving, which gives you more time to enter, exit, which is also a big factor when you trade with more money. And the confirmations are much easier to see too. Like the daily, for example, is the easiest trading ever. You look at the stochastics when it tops out and bottoms out, and you look at a couple confirmation below and above. That's it. 5 minute needs way more work to trade, because on a 5 minute you need to look to the 1, 3, 5, obviously 15, 30, 90, 1, 2, 3, 4, 6, 8. I go up to the 4, the 6 maybe, right? The 6 really just tells you the overall market movement where we are, and it stops being less relevant when it's towards the top and bottom. It's really just a movement in between. But it's less relevant, but still something that we keep an eye on, So the main time frame that we're trading is the 5 minute, with the 15 minute being our main confirmation, really. So I say the 5 minutes is the main because that's what that's what we need to focus on in order to enter or exit. On the 15 minute, that's essentially the trade that we're trading, but we need to look at the 5 minute more often, But the 15 minute trade is kind of the longest trades that we would do, which would be 16 hours, so up to a day, So yeah. But what if we lose? For whatever reason we lose, right? We can lose in a trade. If it's a mismanagement, misreading, or the stochastics are not working, right? For some reason we lose, right? And that's something. This is also a very, very common mistake when trading stochastics. Let me try and find a situation here. Very common mistake is that when a stochastic is topped out, right, it does not necessarily mean that the price is going to turn down. You need confirmations off of other time frames. I'm sure that, and I haven't looked at this before, but I'm sure that if I look at higher time frames, right, what I will see is that they're still in the move, right? And the higher I go, where am I? The higher I go, the more early in the move it's going to be, right? This one turned around mid-move to go further back up, right? So looking at higher time frames, I would never short here, ever, because all my higher time frames are strongly bullish. But if you look at only the 5 minute, it just about topped out. So, you know, some Joe can just short here, which is probably the worst move you can do. And, you know, if you look at only the 5 minute and you short here, you're like, oh, the stochastics don't work. You know, like something happened. You just explain, I don't know, like cow fell from space. That's why the price shot up. You explain it to yourself and then you just keep losing money like you always do, right? That's option one. Or option two is sit down and be like, oh, okay, well, why did this not work? Well, if you look at the high time frames, basically every single one of those time frames was strongly bullish. So what does that mean? All this means when a 5 minute tops out is, first of all, I want to be in the move still since here, longing. I might take some profit. That's what this is. It's a profit taking scenario. And I might re-enter when the 5 minutes back down or add more in. But that's all I do, right? I definitely don't short here because my higher time frames are screaming at me too long. This is why it's important to look at different time frames, right? Very, very important. So we're not trading stochastics just to trade stochastics. We're trading different time frames and we're interpreting them with stochastics. You can essentially do this with any indicator, right? It takes some time to get used to, and I am working on a new dashboard that kind of makes this easier to see, right? So you will essentially just type in the coin and then you will see the stochastics next to each other with, you know, a green red light or like a hue in between them to see how the market is aligned overall. So it's going to be much easier to see. In this situation, you would have the 5 minute reddish, right? Because it is. But the higher time frames would be all strong green. So obviously you wouldn't enter, right? And then as the price changes, you would see like a wave of green or red moving from left to right or right to left. So that's something that you guys will have. I mean, definitely the members that have the subscription will have it. So yeah, that's an important thing, right? What do we do if we lose? The strategy is solid, right? But it can happen. What if we are in a bad situation? So what we want to do is we want to account for that beforehand. You don't want to put yourself in situations where you're fucked, right? You want to put yourself into situations so it does not happen, right? So you prevent it. How do you prevent it? Ideally, what I love to do, and that's also what the dashboards are built on, is that if I have a trade here, right, and I'm shorting BNB, which, you know, you could probably do. I mean, yeah, at this point, the 15-minute turned around. I don't know what you do in Cypher with the trade, but yeah, man, Joe, fucking Joe. Okay, good question, Karina. What confuses me is when I look through your suggested trade and we deviate from stock RSI strat. Sometimes you post signals and I try to look through it to further understand, and they have tons of other variables. Right, yeah, analyze BTC first. And actually there isn't. Karina, actually, the only thing that I look at is the stochastics, right? Only the stochastic. I don't even look at the RSI. So what I do is I look at the stochastic. Is it topped or bottomed? Is it going up and down? And then I just look at all other time frames and see how they're aligned, right? What do the higher time frames do? What do the lower time frames do, right? Essentially what I just explained with the BNB example. So that way, I don't really look at other variables. No news, no other indicators. It's just like that was the thing today. Today just looked at different time frames and where the stochastics are. And once they aligned, we entered. That's literally it. There's no other thing, right? So no really other variables. You know, Cypher, if you're still in, then it's like, okay, you're probably assuming this is the bottom, and like the price is gonna go up, right? But it's like, you know, being wrong in timing is the same as being wrong, you know. Yeah, so does that make sense, Karina? What I just said with the I know that it can be confusing sometimes, the stochastics, but really it's just looking at the stochastics, and then it's looking at different time frames and seeing, are they topped out or bottomed out, right? And as you do that, I look at different coins, right? And then as you look at different coins, then you will get an overall idea, meaning that, you know, if say BNB, right? So we're longing BNB here, we're just looking at BNB, but ADA, Solana, VeChain, Bitcoin, especially Bitcoin, Chiliz, Matic, they're all like primed to short. And if they're primed to short, then, you know, the price is going to go down based on our strategy. Then it's going to be pretty hard for BNB to push up, right? So even if it is going to go up, it will first go down because everything else is going down. And then it will, you know, relapse into its move, right? But, you know, if Bitcoin is doing a big move, it does not matter what other coins want to do. They will do what Bitcoin does, you know? So on a short-term impulse movement, right? So in that case, also here, we were looking, this right here was our drop where we shorted Matic, I think. So another reason why it made sense to short Matic, trade still here. Let's look at it. Okay, so here's the entry, right? Why was it an entry? 5 minute topped out, going down. 15 minutes going down, right? So it turned around, turned back around, going down. My 3 minute topped out, going down. So I already have the strength of the 3 on the 5 minute, and the 15 minute is turning down, right? So that by itself is very good. My 30 minute is in the move going down. My 90 minutes going down. My 1 hour is going down. My 2 hours going down. My 3 hours going down. My 4 hours going down. And Bitcoin, 15 minute topped out, going down. 5 minutes going down. 30 minutes was going up. And here, 1 hour going down, 2 hour going down, 3 hour going down. So from, I don't know, the 10 things that I just looked at, 9 were going down. What's Matic gonna do? It's gonna go down. Matic is at the top of the range, so by default, it's tracked to go down. It's at a super trend line here, which, by the way, Karina, you don't even have to look at. Like, you can see this resistance without this red line that I have here, right? It's a clear resistance. My stop loss is super tight at that resistance. Everything I just looked at was going down on the stochastics. That's why it was an easy trade. There was no other variable. I was just looking at going down, and then Bitcoin was, you know, pushing to go down. What does that mean? Well, my trade's probably going to play out, right? And that was the same thing with Solana earlier. Let's take a look at that. Let me make it prettier. Let's take a look at that. Look at the 5 minute. Okay, so 5 minute was going down, but it had a pretty big move already. 15-minute was at the start of going down. That's why I entered. So 5-minute in this case could have waited for the 5-minute to top out here. Could have. This is what, 7 o'clock, 7 a.m. I probably entered a bit later actually. 7 a.m. Bitcoin. What was Bitcoin doing at 7 a.m.? The 5-minute was going down. The 15-minute was turning down. Okay, so that's why. My 5-minute was going down. It was almost bottomed out. So usually I would wait for the move up. However, the 15-minute was just at the start of going down. My 30-minute was going down. My 1 hour was going down. My 90-minute was going down. My 2 hour was going down. My 3 hour was going down. So everything was going down, right? So the 5-minute, like even if it, goes back up, it's probably going to go down. There could have been a worse situation for me, right? Where essentially I would enter here and I would be, on the losing side for a little bit till the 5-minute tops out, right? But in this case, it was a quick dump move, which put me instant into profits. So that's why, that's obviously why we entered here. And then let's look at ADA as well. The 5-minute. So 5-minute topped out, going down. 3-minute topped out, going down. 15-minute topped out, going down. 30-minute going down. 90-minute going down. 1 hour going down. 2 hour going down. 3 hour going down. See, it's not that hard, right? I just pick the trades where everything's going down, right? It's not there's nothing's complicated about this, right? It's literally this one question, and if you answer this one question with yes, that's a trade, which means do all the time frames that you look at say the same thing. If they're all going down, you short. If they're all going up, you long. With the one caveat that you look at the 5-minute to time when you want to enter, right? So the 5-minute tells you enter here, 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 here. When it turns around where it's topped or bottomed, right? That makes sure that you're not going to enter and the price is going to go against you right away, right? Because you don't want that. What you want is have the stochastic tell you when a good time is to enter. And the beauty of it is that the stochastic is a lagging indicator, right? On a 5-minute, it's going to be lagging less than on a 4 hour, right? But if the 5-minute is going down already, it means that there has been some strength to the downside. So if you enter here, then that momentum is probably going to keep going. Right. Okay, so I hope that this made sense for everyone here. I hope that I made this more clear now. But really, it's just, hey, you look at the time frame. You look at the coin, right? First of all, you look at the market, right? You look at Bitcoin. And then you look at other trades. But, you just see where are the higher time frames going, right? If they're all messed up, if they're going against each other, we don't trade, right? We don't trade. We look at alignments, right? The 3 trades that I took today, all of the time frames were going the same direction. So it's pretty easy to pull off a short here, right? So we want to go, one friend once said, you don't want to fight the river, right? You want to go with the river, right? That's what you want to do. There's one move that the market's going one way. The stochastics are clearly telling you where it's going. That's what you've been looking at, right? And in this time, right, we have been looking at longs, right? Whereas this was, would have been a good long. But, on a 5, on a 15-minute, but the 15 really hasn't bottomed out all the way up until now, right? With the 5-minute not being bottomed out yet. So we did not have a situation yet where both the 5 and 15 are bottomed out. I was expecting that, earlier, and that's why we were talking about longs too, but it just didn't happen. All that happened was that our 5-minute and 15-minute went back up and started going down again. And if that happens, like, we're not here to judge, we're here to listen, right? If that happens, we short. It does not matter for us, right? We're just trying to catch moves. That's all we do. We don't care if it goes up or down. So a 5 and 15-minute alignment is really what you've been looking for, because on a 15-minute here, it's been bottomed out so long, but the 5-minute hasn't bottomed out once, right? Like in this period, hasn't bottomed out once, and the 30-minute is just about bottomed out, right? With also the price and the trauma here. So like the long, what's probably gonna happen is I'm gonna go to sleep, and then I wake up in the morning and then I see a long that I could have taken. But I'm not gonna, because I'm gonna sleep. And that's fine, because tomorrow I'm gonna look for another trade. And the beauty of the market is that it moves all the time, right? And it doesn't matter if it's crypto, stocks, Forex, it's all the same thing, right? So that's the important part. We'll look at the alignments in the stochastics. So going back to what we do if we lose or if we are losing, right? Today was a pretty clear day for shorts. At least the specific times that we were trading or I was trading. But sometimes you might have like different sectors doing different things, right? So, and that happened before, I remember shorting Chiliz, but longing Doge, and both of them worked, right? And this is something that is actually good to do, right? This is something that is really, really, that's a way of hedging, right? So let's assume that we're shorting, right? We're shorting one or two coins. So we've been looking at the market, we've been looking at Bitcoin, then we found different coins and we found, short opportunities on those coins. So now we take them, but now the preferred things to look at again are longs. So if we find, alignments that are long, and we take them, then in the market, we have short positions that are according to our strategy, and we have long positions that are according to our strategy on different coins, right? And if you do that, you have the right setup, you have the right entry, right? And both of them are likely to work out. Well, then, if something crazy would happen in the market, you would be hedged from both sides, right? So if for some reason one trade would just go strongly against you and you don't have a stop loss or something like that, or it just hits your stop loss, the other one is probably going to pump up and cover for that stop loss, right? Because we have set them up as negatively correlated strategies. And so number one, how can you do that? You can look at different coins. You can look at different indicators, right? So the stochastic is not a miracle indicator, right? And we don't have a miracle strategy. We don't. You can do this with basically any indicator, like, indicators that have value. You can do that with, many indicators. You just need to look at the confirmations from other time frames. That's why I liked, a couple days back, we were back testing, or weeks back at this point, we were back testing a strategy that was an MA cross, right? Moving averages cross. You can take that strategy, look at different time frames, and see how the signals are coming together, right? How the moving averages are moving in relation to each other, and figure out the same thing with the price movement as you do with the stochastics. It's the same thing, because the key is not the stochastic indicator. The key is looking at the market from different perspectives and then connecting the dots together. And again, you don't need to have it figured out all the way, right? Most of the time when someone asks me, hey, what do you think about this chart? Should I long or should I short here? Or my favorite question, if you had to long or short, what would you do here? My answer usually is nothing, because I'm not going to trade this. I'm only going to trade what has the highest probability of success for me. Right? So I'm not gonna be on that. I don't care if the Pope is trading it. I'm not gonna trade it. You know? So that's an important thing. So how can you hedge? You can look at different sectors in the market, right? You can look at different coins, find longs and shorts. You can look at different indicators, which do different indicators, and essentially different strategies. And you can look at different time frames. And that is something that we do, which is that, we have our daily trades, right? We do our daily trades. We make our, 10% target, mostly overshoot it, right? That's what we do in a day. But then we have another layer of trading, which is our dashboards that trade the 4 hour and up. And these moves, they take a couple days. One day, 20 hours, so like 2 days essentially. This one's taking almost 3 days. This big move, which both Solana and Phantom did, took 18 days, right? So these trades are much, much slower, but they work just as well. The only difference is that, when you day trade, you can compound. So, you trade with $1,000, you make 30%. The next day you trade with $1,300, right? You make 30% on that. You just made more than day one. These time frames, however, or like the dashboard strategies, they're consistent. They're very, very consistent with much less room for failure. Or inconsistencies. So while we manually trade our 5 and 15 minute, we know that no matter what, we have something else going on in the background that does not require a lot of attention from us. We literally just long when the bot says long, and we short when the bot says short. That's all we do, right? And that happens every couple days, so it's not something that's like on your mind constantly. And the good thing is that because you're trading smaller time frames manually, you don't have this on your mind, so you're not going to mess it up. And because you are trading the larger time frames, you know that no matter what, you have something else going on that's profitable in and of itself. So, let's say this big move, right? This big move I'm on ADA right now. This big move, on the smaller time frame, we're probably going to have a couple shorts here, right? By default, you will, because that's how stochastics work, especially in a big up move. Like you can see it even on the 4 hour, like it's just chopping around, right? So you're probably going to have a bunch of shorts here that you're going to trade on the 5 and 15 minute. Well, your large time frame, or like the dashboard strategies, they were just long, right? So even if you have shorts here and they don't work out, the price moves against you, well, you're already profiting off of your dashboards. So you're hedging yourself, right? You have a safety net, so to speak. So basically you have a different dimension, a different layer of your trading. And that's what's really good, because your focus is somewhere else. The dashboards are trading automatically. You just need to execute those trades. But then, when you might have a bad day on your manual trades, the dashboards can save you. When the dashboards have a bad day, your manual trades can save you, right? So now you have, instead of one horse in a race, you have two horses in a race. Both are good horses, right? But a horse can have a bad day, and that's where the other horse can pull the first horse, right? And that's something very important, and that is something that understanding or an execution of this is probably the main difference between retail traders and institutional traders. Because retail traders don't even know that this exists, right? Whereas institutional traders would never enter a trade without being hedged in other sectors, in other directions, right? So that's very important. An understanding of hedging and limiting your risk to any side of the market is a very common thing in institutional traders, but a rarity in retail traders. And that is also a reason why retail traders will lose money over time, because even if you're right most of the time, there are some times when you're wrong. Like, no one's right 100% of the time, right? So the question is, what happens when you're wrong? Like, did you even think about the possibility of you being wrong? Because you will be wrong, right? And having another complete strategy or system, in our case, that will do the opposite, overall profitable, but will do the larger scale trade while we focus on the details, daily trading, will give us the confidence and also the financial gain of being able to have a hedge position, really, right? So that's very, very, very important. And having just the dashboards running in the back is probably the most efficient way of how you can hedge your day trading, because it is a separate entity, right? It's a completely separate entity. And the beauty of it is that you're much more exposed on your day trades. So when you get profits out of those day trades, but you don't just want to sit them, right? Obviously, when you take money out of trading in order to spend it, you spend it. But if you take it out and you don't really know what to do with it, you just don't want to risk it again. Well, this is another vehicle you can put it in that's lower risk and slower, but has just a compounding effect over time. So that is very important, right? So that pretty much concludes the call. In 4 minutes, I'll have another call with Isaac, so gotta get that ready. But yeah, the best setup really is having the stochastic for day trading and understanding it, right? Getting it into your muscle memory. And that's something that we're doing every day now, is trading it and being able to spot the trades the right way, right? I hope, I really, really hope that that going through the trades as we did today, especially the trades that we've traded, or like I've traded, I don't know if someone else traded them with me, traded these trades, I hope it made sense why I entered them. Like, literally everything was topped out, right? It's not like, it was not intuition, it was none of that. It was just the fact that every single stochastic was going my way for short. So that's why it was an entry, right? And could you have made money here or here or here or here or here? Yes, absolutely. But that's not our goal. That's not our job. Our job is to trade the ones that have the highest probability of that move happening. And how do you do that? You make sure that all the stochastics are aligned over different time frames, right? What are the questions? What's the first question when someone gives a setup? Show me the stochastics. What does the 5 minute or 15 minute do? What's something that I usually say? Wait for the 5 minute to top out or bottom out. It's the same thing over and over, right? We don't have to overcomplicate it. It really is that simple. It's just understanding it, getting it into your muscle memory. That takes time, right? I'm not saying it's easy, I'm saying it's simple, right? So there's a small amount of rules in order to get a large amount of success. executing on those rules might not necessarily be easy. I'm saying that's a few amount of those rules, and those rules are easily understandable. Meaning, stochastic needs to be topped out or go in your direction across all time frames. That's it. That's it. Usually, the problem is that you have FOMO, or you have some emotions, you're excited, you want to make trades, you're scared that you're not going to find a trade today, so you're going to enter trades that are not optimal. But then looking back, looking over that trade, it was clear that you shouldn't have entered it. So in that moment, right, the problem is not you trading, the problem is you and your emotional control. And that's the problem, right? It's a person problem, it's not a trading problem. Right? So in that situation, it's like, okay, well, how do we work on that? Right? Best antidote to that is to just have a lot of profitable trades and, get burnt and then not get burnt again. So really just experience, but then also someone being able to call it out and tell you over and over and over again is also very important. So I don't know if you guys are at the point already where sometimes, you're sick of me saying the same things over and over, but that's just how you get it engraved in your memory, right? That's just what it is. You just need to hear something a specific amount of times and see it with your own eyes in order to be able to execute on that. So yeah, that's it. From my side, we talked about the stochastic, the strategies, and then we talked about how we hedge it. Right? And that's something we'll be talking about tomorrow in detail. How do we trade our dashboards? How do we execute on our dashboards? And we'll have both things going on at the same time. So we have two horses in the race rather than one, and one's more automated than the other. So we basically get the best of both worlds. Right? And that's combining that is another huge edge that you will have over other traders. And really just understanding this plus the dashboards together, like you are set up to outperform basically like I could bet my money that you could outperform anyone that you talk to in trading. Unless you have the phone number of a very successful person on Wall Street or something similar. Like it's that. And that's just, it might be hard to understand that it's simple, right? It is simple. It's just people are too emotional, they're too radical, and they just mismanage things. Like it would be hard if you traded, you would have a bad trade, and then you wouldn't know what went wrong. But usually you know what went wrong. Usually you know exactly what went wrong. So that's not the problem. The problem is not this complicated or hard. The problem is that you're not executing what you know you should be doing, right? So, and that's something that comes with experience and, with guidance. So that's it from my side today. I hope you guys learned something. If you have any questions, let me know. I'm about to jump off. This will be a recording. It will be up today. And other than that, I'll see you for the live trading session tomorrow, and then for the live call talking about the dashboards tomorrow. And if you guys liked this video, then just tell someone about it outside of the Discord. Just tell them there was a nice video, that you learned something, tell them what you learned, and tell them that they should join the Discord. All right, that's it, and I'll see you guys later.